Hello everyone. We are approaching the end of financial year 2020, which has been an eventful year, and with all the changes that came in this year due to COVID, you must be thinking, how would this affect your tax this year? I have come here today to explain these changes to you. However, before I proceed, I need to play a small disclaimer. This is Anand Shukla from A1 Accountants, and we are accountants, tax agents, auditors, property and business buyers advocates, and small business advisors. Although I have played the generic disclaimer, I would like to inform what I am about to talk about today are only the highlights of the actual legislation, and hence the application of the tax law will be subject to change based on interpretation as well as personal circumstances. Some contents of this video presentation are technical, and by no means any financial advice is provided, given, or suggested. You should consult a qualified advisor before using this information to prepare your tax returns for the financial year 2020. Okay, so here we go. Many of us may have been working from home this year due to the restrictions, and hence would like to know what you can and cannot claim. So then let us start with what you can claim for working from home. Generally, working from home deduction could include costs associated with heating, cooling, power, cleaning costs for the dedicated work area, furniture, phone and internet, computers, printer, toner, stationery, etc., software purchases, and any other expenses that may enable you to work from home. There are 3 methods this year to claim working from home expenses, and you can choose either one. Please note, appropriate records and substantiation will be required to claim these expenses on the tax return. The actual method. You would need receipts and records of actual expenses incurred to use this method. The hourly rate method, applicable prior to COVID restrictions, which was up to the 1st of March 2020. This gives you a deduction of 52 cents an hour, in addition to some other working from home expenses that you are eligible to claim under the 52 cents an hour method. The shortcut method. The shortcut method, which can be used for periods after restrictions were announced, which apply from the 1st of March 2020 to 30th of June 2020. This deduction allows 80 cents an hour. As part of the work from home deduction, you cannot claim for costs of tea, coffee, milk, etc. that your employer would provide at your regular workplace. You cannot claim for costs associated with homeschooling of children, items that you are reimbursed for by your employer. And employees cannot claim for rent, mortgage interest, water and rates as well. So then which one is the better option? The 80 cents per hour method includes everything. If you choose this method, then you would not be eligible to claim for any furniture purchases, computer or consumables, phone and internet, power and so on. You may be better off on the 52 cents per hour method or even the actual expenses method, depending on your personal circumstances. The 52 cents and the actual expenses method require you to retain more records than the 80 cents an hour deduction. In many cases, the 80 cents an hour could turn out to be better too. Generally, if you did make any large purchases, you could be better off on the actual expenses method. If you didn't, then a mix of the 52 cents and 80 cents may be more favorable to go about with this deduction. Now, some of you may have withdrawn super due to facing hardships, and may be wondering if you need to pay tax on such a withdrawal. The good news is, due to special legislation being enacted to release super, this income is tax-free and hence does not need to be reported on your tax returns this year. Many of you may have received payments from Centrelink and may not be sure of what is taxable and what is not. Let me clarify by telling you the $750 COVID support is a non-taxable payment. However, the job seeker income is taxable. Hence, you would be required to include income from job seeker or unemployment benefits into your tax return at end of financial year. I also understand some of you would be on job keeper and may have been paid a minimum gross fortnightly payment of $1,500 by your employer. This income is taxable and needs to be declared on the tax return. If you are a sole trader and you received a payment towards business participation as part of the JobKeeper scheme, this income is taxable too. On a separate note, we specialize in small businesses, and for more business-related tax planning tax time end of financial year tips, please complete the link in the description below to receive a link to a free video presentation for business tax planning tips. I understand it must have been quite late planning for tax time this year. However, you could potentially start planning for the next year in advance. Okay, so moving on. People who work in client-facing roles such as customer service or food handling could be eligible to claim for hand gloves, masks and sanitizers too. I have briefly described some of the changes that affect your tax return this year. You would also be required to consider the change in circumstances to reduce some of the other claims. For example, if you had been working from home, you would not be needing to travel and hence you would not need a uniform too. No uniform means no laundry expenses as well. Hence, these expenses ideally would go down. Please keep in mind, for you to be eligible to claim an expense as a deduction, the expense must be incurred by you and should be related to you being able to earn an assessable income. It should not be reimbursed by your employer, and accurate record keeping is a must to substantiate your claims. Electronic record keeping is acceptable too, meaning you do not need to retain physical copies of invoices. You could use an app to store receipts in an electronic form. Now, many of you may have had an investment property in the last financial year, and per the new rules, deductions on vacant land are unavailable from the 1st of July 2019. Some minor exceptions do apply in this space. However, if you have been maintaining land as an investment property, then this would not be a deductible expense from this financial year onwards. It may hence be the right time to start building. There has also been a change in personal superannuation contribution deductions. Unused value of prior year superannuation caps can now be carried forward to future years. This can be done for up to 5 previous years starting from the financial year 2018-19, with the first year of contribution deduction being the financial year 2019-20. There are specific rules with regards to super contribution caps and you should consult an advisor. So then what else can you claim? All your standard expenses which you have been claiming on a regular basis remain unchanged and you should be eligible to claim for these. Some of those are work-related travel and car, work-related education, donations, memberships, licenses and subscriptions, uniform and laundry, tax agents fees, union fee, income protection and any other occupation-specific deductions. Coming to the end of the presentation then, I would like to draw your attention to our services. We are available to help answer your questions, provide obligation-free tax estimates, as well as complete your tax returns over the phone or online. Feel free to contact us. I have provided a link in the description below to our quick pre-fill online form which you can use to submit an online tax return request. One of our accountants shall be in touch with you to organize a no-obligation consult. With this, I thank you all for listening to me and wish you all a safe and happy new financial year. Thank you.